I want to show you guys my daily P&L of a very typical trading day. If you've seen my previous videos, you'll know that this channel is all about realistic trading content. There are days that traders should not trade at all. There are also days that traders should trade small, using smaller position sizes to secure smaller wins. And there are definitely days when traders should recognize the opportunities given by the market and size up more aggressively. I'm David Capablanca, a full-time day trader who specializes in small cap stock trading. My profits and win rate have been verified by these notable firms. In this video, I will walk you through my trading strategy with a step-by-step strategy tutorial using my real trades from a typical trading day. As you can see on my DOS Trader P&L window, my total profits for this day was slightly over $3,000. So for complete transparency, this is just a relatively small gain for my current account size. However, I recommend that you put that P&L figure away because the value that I like to provide in this video is the process on how I executed my trades. What I'm going to explain includes Number 1, the trading strategy I use to secure small and consistent wins. Number 2, how I traded the NASDAQ compliance pump play. Number 3, and understanding the different intraday timeframes. You can learn all of these for free on this channel, so if you don't mind, please give me a free like on this video. The main trade that I want to share with you is WORX. Regardless of the profits, the recap of this trade will provide more meaningful education. Okay, so on November 20th, WORX had news in the after hours saying that they regained NASDAQ compliance. And as we know, with NASDAQ compliance, it can be pump plays. A lot of buyers like to buy it for, quick profits and for the pump agenda. So anyways, they're weak catalysts, but you gotta respect the pump. So in the pre-market, it gapped up even more. It's over 100%. 100% gappers attracts a lot of short sellers, and with very small floats, they have a tendency to squeeze. And the NASDAQ compliance is enough of a catalyst for this thing to run because it attracts buyers for the pumping and short sellers for the weak catalyst. And as we know, with consolidation right here, it keeps attracting more short sellers, and as it trickles off, it attracts even more short sellers, having FOMO that the stock is going to fade without them. And of course, that eventually leads to a squeeze in the first half hour of the day. The stock actually halted up, and that's when I look to short it, because with that small float and when this consolidation action in the pre-market and this trickle off fade that attracts more short sellers in, it just has the potential to squeeze further, and it has a violent squeeze, halts up. 1.5 million float. You gotta respect it. Anyway, so I shorted here. I'll go over the executions later, but I look to short in pockets of extension, just like that. And it's consolidating now. Right now it is Sunday, November 25th. It's actually consolidated more a couple days later, but I traded it this day, and so you gotta respect the pump. But looking at the year chart, as you can see, I tracked the float, and the float is the historical float. It hasn't been diluted much. Right now it's 1.5 million float, but for the whole year it's been 1 million float, and it has a history of popping and dropping, but that 1.1 million float is very small, and it won't take much to squeeze it. And and they don't have that much of a history of diluting recently. The last reverse split was in October. The reported one was October 11th, a 15-for-1 reverse split, which I'll go over in Dilution Tracker in a second. But it is a historically bad company. It's just, as you can see in the 5-year charts, it's going straight down, and it doesn't hold much. Why doesn't this go? Doesn't hold much, and it's just pop and dropper. They always need cash. As you can see here, they raised some cash. They have 10 months, but other than that, they always tend to run out of cash. And I just look for this little portion, the first half hour, first hour of the day, and then I'll leave it alone, and I'll get into that in a second. So this is the Dilution Tracker page for WORX, WORX. And as we can see, it's in the health information services sector. It has that 1.5 million flow, which I went over. In the recent, all year long, the float was reported like 1.1 million. So now since it's 1.5 million, we can interpret that as they are diluting somewhat into that because their cash need is high. They have, you know, 0.9 months left of cash, which they need cash. And they have warrants, but they're not registered. So that's a note to, something to make note of. They're not registered, but they do have warrants, and they have some dilution in the form of an equity line. So in the future, I'll go break down how I trade with that information, because it's not exactly like a slam dunk scenario where they're just gonna dump all this dilution into the float. So this is I'll go over that in future videos. And as we can see, they've done private placements all since 2021, private placements. And yeah, barely any institutional ownership. Is almost non-existent. As we spoke about, it's a really bad company. I've been scanning for this type of stock for years. When all the fundamental information aligns, it's almost intuitive for me to form a trade thesis that this stock is likely to spike and fail in the opening market hour. Are you interested in learning more about my stock selection criteria? I'd love to make more content on how I choose the stocks that fit my edge in trading. But I'd also want to make sure that my video is providing the educational value you need. Please comment if you want to learn more about stock selection or any other topics that you want to see next. More importantly, for this stock WORX, I would not want to be greedy or aggressive with my sizing. My trade thesis was to only trade this stock in the morning and to leave it when we're approaching lunch or power hour. So the main reason is because WORX is under 2 million float. So for my criteria, I don't trade stocks under 1 million float, but I will trade them under 2 million float. But you know, I'm just going to be very, very cautious with it. So the reason why I didn't want to stay in this stock too long is because it's a 1.5 million float. Very small float. Short sellers can overcrowd it, and that overcrowding can lead to swipe ups, halt ups, very nasty short squeezes that I don't want to be a part of. So when I get my clear entry, which is the pockets of extension, which is when WORX halted up in the morning, when it was clear to me that short sellers overcrowded it in the pre-market and short sellers intraday were using those pre-market highs and after hours highs from the day prior as the major stop outs areas. So once those areas were approached, you're going to see a domino effect of stop outs, which leads to possibly a halt up, which it did halt up. And I was able to piece that puzzle together pretty quickly and enter it after the halt up. And I get that pocket of extension. I'm able to read the volume, read the price action, level 2, time and sales, etc. and take that piece of the move and call it a day. And the reason why I don't want to trade it in midday or power hour, especially because it can be consolidating, which it found the support level and was consolidating. It's attracting short sellers as it's consolidating, and eventually with some buying in the power hour, which can happen, very likely can happen, it can cause a short squeeze, and I don't want to be part of that. So that's why I didn't stay in the trade for lunch or power hour. There are certain types of setups that I would hold longer to short the all-day fade, or even to capture the entire backside move for a couple days. But a key concept to share with you guys is, as traders, no matter what your trading style is, you should always know the ideal market conditions for your edge. I'm a fundamental and statistical small cap short seller, so I pay attention to the price action of the top gainers every day to gain an understanding of how small cap stocks are trading in a broader picture. For example, the current market environment for small cap stocks seems to have more and more irregular price actions. I'm seeing stocks that faded in the morning but randomly pick up volume and spike in the afternoon. I'm also seeing the first red day pattern is less predictable. At the same time, we are also not in a hot market where we have multiple 300% gappers in a day. If you also trade small cap stocks, I'd love to hear your thoughts. How's trading going for you? And have you noticed any changes in the patterns you usually look for? Now, given the current market conditions, my execution strategy has been adjusted to focus on smaller wins and shorter trade durations. Let's dive into the details of how I execute my trades. Here's my DOS execution chart for WORX. As this is a short trade, the red arrows that you are seeing here represent my entries. or adding more shares. On the other hand, the green arrows represent my exits or decreasing my shares. There are two key concepts about my execution strategy. Number one, share recycling. Number two, observing price action at different times of the day. The first concept, share recycling, is a more advanced trading style. If you are newer in trading, I would recommend that you focus on mastering one entry and one exit first. When you have gained some experience in terms of managing your open trades, calculating your position size, and knowing your platform execution well, then the share recycling strategy can be very beneficial for your trading. This is how I recycle shares. So with WORX, I entered my position after the halt in the morning. I saw in pre-market it was consolidating just over 100% up on the day, and I know short sellers are attracted to 100% gappers, and they tend to overcrowd themselves. And as we spoke earlier about the float on WORX, it's very small. It's under 2 million, and it's currently around 1.5 million. So 1.5 million float on a low price stock could be overcrowded pretty easily. And it just took the NASDAQ compliance news catalyst in the after hours the day prior for it to jump up and attract some long buyers, some short sellers in the morning. It attracted some short sellers in the morning that overcrowded it, and they were chasing it down since it was over 100%. They don't want to miss out on the next 100% gapper, and it faded. Short sellers chased it down, and in the morning, at the market open, there was a spike, and as it approached the pre-market highs, that's where short sellers looked to stop out, and it looks like they all stopped out. A lot of short sellers stopped out. It was a domino effect, and leading to a halt. And as it halted up, I looked to enter, and that's exactly what I did. And since it's a very small float, 1.5 million float, I want to be nimble in this. I don't want to be have any type of size that could lead to another halt, because low float stocks, especially under 2 million stocks, 2 million float stocks, they can halt several times, and they can get really nasty. So in this case, I like to use the recycling shares so I can cover proactively and re-enter, because the stock is over 100%. It's halted up. It's clear that a lot of short sellers were using the pre-market and after hours highs as stops. I was using that as my thesis, and I just wrote it down to the support levels, and I was about done with it. And as I go lower and lower, I'm smaller size and smaller size. So I'm bigger size as it higher, and as I'm getting rid of my covers, getting rid of my shares by covering, the position is smaller and smaller. Also, the volume, as the volume is getting less and less, I'm smaller and smaller in the position as well. And as I mentioned, I like to get the pocket of extension where the volume is, and with that volume, I'm able to see, okay, this is enough volume to push it through the resistance level, which is the pre-market high and the after hours high, and that's what got it to halt up. And as the volume, the crescendo of volume, starts to trickle off, that's when the backside starts to come in. It's just a 1.5 million float stock. This thing can easily come back, so you gotta respect it. Now that you understand the basics of share recycling, another crucial aspect to bring your trading to the next level is to have a broker that offers advanced routing and execution speed. I use Cobra Trading to integrate into the fastest trading execution platform, EdgetoTrade. Cobra Trading allows me a unique route for my limit orders called REB25. This is my secret to getting my orders filled fast and at ideal prices, which is very important for fast-paced short selling. I also get a lot of limit order rebates for using this route, meaning that they reimburse my trading commissions to help me lower my costs and lock in higher net profits. You can also use the special link in the description to get Cobra Prime and a lifetime 33% off commissions, and get access to all the other essential trading tools, including Trade Ideas, Dilution Tracker, and Ask Edgar. Cobra Trading is a top-tier broker for short selling, day traders, and swing traders. If you are looking for an insured and reliable broker, you can use the link in my description to get all the exclusive deals. Recently, I've been adjusting to the changing price action during the major time frames of the day. I categorize the intraday time frames into the pre-market hours, the morning opening hours from 9:30 a.m. to 11:30 a.m. market time, the lunch hour The power hour from 2 to 4 p.m. market time. And lastly, the after hours. I used to find my edge in shorting the pre-market pumps, but I set a rule for myself to stop trading pre-market and only focus on the morning session. So the reason why I changed from trading the pre-market is because now I have more capital, and in the pre-market there's wider spreads and there's no halts. So there could be like news coming out in the future. So like, let's say the price action is moving now in a stock. Then like at 7 a.m. Eastern or 8 a.m., 9 a.m., the news comes out, but you shorted it too early. So people, the buying, that demand could have been from people knowing the news before it comes out. So I don't want to, and that happens a lot, by the way, for biotechs, pharmaceutical, medical stuff. They could be releasing the news at the open. They could be releasing the news later, during the later hours. And if you short it too early, now like you're shorting it ahead of something bullish. And that can happen once in a while, and that can lead to like getting blindsided. So to prevent that from happening, I'll just trade the open. Also, these days now, since there's a lot of activity in the pre-market, short sellers tend to overcrowd themselves in the pre-market. Now, for me, with more capital now, I'd rather just wait till the market opens. However, in 2020, and I would say 2020 and before 2020, there was hardly any pre-market activity. So short sellers couldn't really overcrowd anything in the small cap pre-market. Now they can. So that's the reason why I don't trade pre-market anymore. And a good example of like the pre-market, why I don't trade pre-market. So one loss that sticks out to me off the top of my head was MACK. It's MAC. Around a year and a half ago, this stock actually went up like crazy. It went up like crazy in the pre-market, and news, I couldn't find any news. And it was doing the same pattern that I shorted over and over again. And yeah, the news came out like half an hour or so later, and it was news of like some form of acquisition or some form of like something I couldn't, it's like, you can't fight it. I just take the loss. But it was a loss that could have been avoided because I don't short acquisition. So that's a good example, by the way. If something spikes up and it fits the criteria, but you don't know the news, and actually comes out later, 15, 20, 30 minutes later, which is too late already, that it's an acquisition, it's like, oh man, this could have been avoided. So when that happens like 2 or 3 times, it's like, okay, I think it's time to chill out in the pre-market. But the pre-market served me very well in 2020 and 21. Also, the short sellers overcrowded in the pre-market. So it's like a lot of inefficiencies that are there that you can take advantage of, and I did take advantage of them in 2020 and 2021. But for me at this point, it's not. With more capital now, I just open myself up to more risk, potential outlier loss, because the wider spreads, no halts, and news that you don't know, that might come out later. So it's just, I'd rather just get my rest in the pre-market. That's another thing. So rest. When you have more capital, you have more at risk, you need more rest. That's why I don't trade pre-market. So I like to separate my trading into different hours. You got the first portion of the day, the morning. You got midday, you got power hour, and midday, 11:30 a.m. I have a separate playbook for that. And it's like a lot of pumps that happen out of nowhere. There's like manipulation that happens midday, because manipulators know that traders are not at their desk. They're at lunch, or they're not as active, and that can open the door for manipulation. So it's like when no one's paying attention, they manipulate. And so like I have a separate playbook for that. Sometimes I'll see some random midday movers, midday halt ups or something like that, and I have a specific playbook, and I will look to short that. So I separate the whole trading day into the morning, midday, power hour, after hours, of course pre-market, and it's just like a separate strategies for everything. I hope this trading recap helps you understand the importance of having a repeatable trading strategy. Do not believe what you see on Twitter or social media. There are traders who post big profits every day because they want you to think that trading is easy and lure you into their chat room. Trading is not easy, but it can be simplified and turned into a consistent and repeatable daily routine. You just have to put in the hard work learn from the right people, and show up every day until the big profitable play is presented to you. Please leave a like if you enjoyed this video, and subscribe to this channel for more realistic trading content. If you want to see more of my real trades, I share my trade recaps like this every day. On my member-only content, you can join my channel's membership to see all of my private trade and explanations of my process with complete transparency.